Thank you for joining me. I'm Alex, and I would like to talk to you about Micron Technologies. So, Micron is a manufacturer of computer chips, especially memory, but they do a few other things as well, as do all chip manufacturers. But that presents a fairly unique challenge in that demand for computers and their parts is not linear and is not constant. So things go up and down, and with it come prices, and it's kind of like the stock market in a way where chip prices are really low, and so demand increases, so chip prices go higher while the demand doesn't immediately decrease because, in a lot of companies, people have to make decisions, and the decisions are fairly long term, so they just decided to buy new equipment, and then prices rise before they can actually purchase that equipment. And so it's kind of a up and down with things trailing the market somewhat. So that's why stocks like this are kind of dangerous, because the volatility is so high. But generally, even when the volatility is high, you can find a few good stocks that are out there. So whether or not this is one of them is probably not for me to decide, but I will give you the basics. So price is about $43, which is a market cap of $47 billion with a PE of less than 5, which is incredible. It's hard to find stocks like this, especially during a market that is, chances are it's always near record high, but obviously you're looking for 20 or below, and 5 is just amazing. Dividend yield and payout ratio obviously 0, and it's not actually that obvious, but right now they could be paying a dividend, they just don't. But again, with the nature of the business, if you build a new factory, it will set you back billions of dollars. And with the shrinking of the things on the chip, the transistors, you need to be building new factories every few years. So again, very swingy. Revenue, $30 billion. Earnings, $14 billion, both up significantly from the previous year. Total assets of $49 billion, total liabilities $12 billion, and net tangible assets of $36 billion, which is up 10% from the previous year. You would think they would be going up a lot more than that, but there's certain factors that play into, kind of trying to smooth out those ebbs and flows of the nature of the business. Also, it's listed as a forward PE of just a touch over 8, which means that they expect to be making a lot less money in the following year, which we're in the middle of, basically. And I think that much is obvious because there's no new PlayStation, there's no new Xbox, there's no significant improvement in this year's iPhone. All of that kind of play together in the demand for especially memory chips to not be that high. So one can assume that next year's revenue will be significantly lower, and that likely their earnings will be significantly lower. Now, a PE of 8 is obviously still amazing. So summing that all up, if you're a dividend investor, obviously this is not the stock for you, as fairly usual. It's surprising how many non-dividend stocks I look at. For a growth investor, obviously with the next year, them making less money than they do this year, that will kind of put a damper on growth investing. So obviously this is also not the stock for you. But for a value investor, a PE of under 5 is amazing. A PE of 8 for the coming year is still amazing. And balance sheet looks amazing. The earnings look amazing. The revenue looks amazing. If you have a sufficiently long horizon, I think this is definitely a stock you should be looking into. On a day that the market went up, they went down. I think that kind of makes this a good buy right now. If you cannot stomach the swings, this might not be the stock for you because the nature of the business. But if you are unaffected by what the stocks you're holding are doing day to day and you just want to hold it for a few years, I think this is an amazing stock to invest in. So I think you should be looking into this and doing your own research and kind of looking at what the competition is doing and how the risk factors play out. Their main competitor is Samsung at this point. Obviously, few other players in the same space, but they kind of play this game where the global demand is right at the global supply. It's very hard to build new production capacity, and there's always a baseline of demand because people are always buying cell phones, people are always buying tablets and computers, and it just might not be as much as in the richer years, but there is kind of this baseline of demand. If we ever fell down to just the baseline of the demand, that would be extremely bad, but there is a baseline. So I think that for that reason alone, I don't see a risk of bankruptcy in the near future. If they have multiple extremely bad years, then obviously that becomes an option, but with a company like Micron, you will see long before they go bankrupt that things are amiss and that you can probably get out of the stock without too many losses. So for a value investor, I think that you should be looking into this. You should probably be investing in this. That's it for me for today. If you like this video and you haven't already, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.